Amazon just reported their Q2 earnings after the bell today, and stock immediately ripped by 6%. They smashed expectations across the board, pulling in over 200 billion in revenue and beating their operating income estimates by nearly $4 billion. Wall Street is thrilled, but if you're an Amazon seller, you should not be looking at the headline revenue numbers. You need to look at the three specific metrics paired inside this report that tell us exactly how Amazon is going to treat third-party sellers for the rest of the 2026. Today, I'm going to translate Amazon's Q2 earnings report into plain English, show where they are making the real money, and explain why their massive 200 billion AI investment is about to change how your listings are discovered. Hello, I'm Ruben Alakanian, founder of PAS Professional Amazon Services. The first number every seller needs to look at is the advertising revenue. Amazon's ad business has now crossed 70 billion over trailing 12 months, growing at staggering 24% year over year. That makes advertising Amazon's fastest growing profit lever. What does that mean for you as a seller? It means the cost of doing business on Amazon is structurally increasing. When ad revenue grows 24%, that money is coming directly out of your pocket and seller's margins. Amazon is dedicating more screen real estate to the sponsored placements, and they're finding new ways to monetize your traffic. We're already seeing this with the rollout of Alexa for shopping, where your sponsored products campaigns are automatically opted in as a conversational ads. Amazon knows they cannot raise the fulfillment fees indefinitely without breaking sellers, so they're leaning heavily to the advertising side to drive their operating income up. And if your margins cannot support higher takeouts, you are going to get squeezed out of the by brands that can. The second number is to watch each capital expenditures, or the CapEx. Amazon's confirmed they are on a track to spend 200 billion on CapEx in 2026. All of that is going toward AI and cloud infrastructure. AWS just posted 42 billion in revenue for the quarter, beating estimates and proving that their AI investments are paying off. But why does a seller care about Amazon server farms, you ask? Because the 200 billion is funding the AI that's currently rewriting your product titles. It is funding the Alexa for shopping assistant that is talking over the main search bar. Amazon is not just building AI for other tech companies, they are deploying it directly into their retail store. The algorithm is shifting from keyword matching to a conversational intent. And if Amazon is spending 200 billion to build a agentic AI, you cannot afford to have listings that are only optimized for the 2024 search engine. You have to optimize for the machine that Amazon is betting its future on. And the final number tells a conflicting story about the marketplace itself. The Amazon reported that the store unit growth hit 15%, which is the highest we have seen since COVID. The marketplace is healthy and the consumer demand is there. We also saw Prime Day get moved up to June this year, pulling roughly 26.4 billion in the US online spending into the Q2. But while retail volume is up, Amazon has been quietly trimming corporate headcount, specifically in their customer service and the seller support divisions. This is the reality of selling on Amazon in 2026. Volume is growing, but the human safety net is shrinking. When your listing gets suspended by an AI bot or your title gets rewritten incorrectly, you're going to have a much harder time getting a human on a phone to fix it for you. Amazon is automating the marketplace enforcement, which means you have to be flawless on compliance to avoid getting caught in an automated loop. Amazon's Q2 earnings prove one thing. They are highly profitable, heavily invested in AI, and increasingly reliant on your ad dollars to drive. To survive the second half of 2026, you need a bulletproof margins, AI optimized listings, and a strategy that can absorb rising costs. If you need help auditing your profitability or restructuring your catalog for a new AI search, click the link below to speak with our team at PAS. Subscribe to the channel, and I'll see you in the next video.